Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center, and this is a show dedicated to helping you build the premier accounting firm in your area, offering quality accounting services and getting paid what you're worth. As a show, we focus on various things related to running the business profitably, offering quality services, taking care of our clients, addressing topics that may range from marketing, selling, to training our staff, tech stacks, as well as mental health. In one of these episodes, I'm sure you're going to actually get those little tips and nuggets that you're needing to work on your business and actually take your company to that next level confidently and as you should. Now, one of the things that I want to point out is every week we have on a guest, an expert, someone to bring to us some perspective and insights that we can actually attribute to the business. And today's going to be no exception. I'm excited to have on the show Dr. Howard Polansky. He happens to have started his career actually as a dentist and was first with the U.S. Navy before transitioning to a private practice in Austin, Texas. But from that, he had a life-changing event and now works to actually help families and business owners with a simple financial system so that they can dramatically reduce their debt payments on items like mortgages, business loans, car payments, student loans, and even credit card bills. By managing these payments effectively, you can maintain your lifestyle, but more importantly, even keep more of your money each month and achieve your dreams faster. So he wants to focus on becoming a CFO, basically a cash flow optimizer. So Dr. Polansky, welcome to the show.
Thank you, Roger. I just need to bring you along everywhere and you can do the intro for me. That was fantastic.
Well, it's your life, so you're doing a great job. So Howard, one of the things I really want to kind of focus on here is clearly you started in dentistry, but there was a transition that came as you had this life-changing experience and saw more importance in profit. I want to just bring my listeners up to speed as to what that event was and why this is now your focus.
Yeah. Sometimes life leaves you little clues, and other times life hits you with a 2x4. My 2x4 moment, Sunday morning, Memorial Day weekend, 2018. Jaden, my older son, is 12 years old. I'm sitting next to his bed. He realizes I'm there and he says, "Dad." His voice is barely above a whisper. "Yeah, buddy." I lean over the bed. I put my ear over his mouth to make sure I can hear him. And he says 3 words I'll never forget. "Am I dying?" 12 days earlier, Jaden came home with a stomach ache. 3 days after the stomach ache, we're in the ICU at the Children's Hospital having emergency surgery. It was appendicitis that turned septic.
Oh my.
29 days in the hospital, 19 of them in the ICU, 8 straight days of sedation because he went to the operating room 5 times. After they take the tube out of his throat, they give him methadone and morphine to bring him down from the drugs he was on. So, Roger, imagine your child looks like a heroin addict coming down from a high. And the very first question they will only ask you are those 3 little words. Am I dying? My first breath was, did I hear him correctly? My second breath was, do not lose it right now. I look him in the eyes. I tell him, no, you're not dying. You've had prayers from thousands of people all around the world, and you're going to be just fine. He looks at me. He knows I'm telling him the truth. He closes his eyes to get more rest. I walk outside the room, and then I broke. I was already miserable. I was burnt out from dentistry. I was taking it out on everyone around me. But when I broke, only one thought seared into my mind. If life is this fragile and I'm unhappy with the path that I'm on, burn the ships. It's over. That's what I did. I sold my practice. September 2018, just walked away.
You know, your story is, I think, something that a lot of us as parents especially can relate to and hopefully don't have to experience, because that is something very, very trying. That life-changing experience to you obviously led to a career change, not just a different perspective on life and maybe your relationships. With that change of now moving out of dentistry, did you know where you were going to go next after having sold the business?
Oh God, no. It literally was a year of just sitting there at home trying to unravel the identity of who I am from the profession of what I did.
Mm-hmm.
It literally was a year of decompression where I call it decompression. You could also call it depression. I just didn't know what to do.
Yeah.
All my entire existence up into that point was go to dental school, be a dentist, try and be the best person, best provider that you could be, try and be the best businessman that you can be. And now all of a sudden, like that, I needed to walk away. I needed to completely sever, but now it was like, now what?
One of the things that I think is very important here is, although your selling the business was based on this traumatic experience and realizing you needed to transition, for some, it's a very positive experience and it's a very favorable transition, but still, they typically come to this same moment of decompression or depression as you're describing it, because in our culture, so much of what we define ourselves as is what we do. And it's that career, and where we're entrepreneurs, so much of our definition is based on what we've built. And so I really can relate to what you're sharing just because of the other stories I've heard and the other people I've interacted with. So after this decompression or depression, how did this idea of working with individuals to help them financially seem to be that next path that you should take?
Well, it was completely a fluke. But as I'm transitioning out of dentistry, I'm sitting with another dentist who asked me an obvious question. How are you walking away? Because, Roger, what you may not know is that especially dentistry, is a ton of debt, a ton of it.
Yeah.
So, to put this in context, the two most expensive dental schools in the United States is the University of Southern California and NYU. They tell the incoming classmen for the 4 years of dental school, just those 4 years, expect to take out $800,000 of loans. Okay. Now the average is only 350 to 400. Okay. But that's just dental school. That's not college. That's not if you specialize. That's not buying a practice. You have to live somewhere. You probably have car payments. Now you've got the student loans to pay. You got married. Now you have your spouse's loans. I haven't even spoken about that you passed the boards and you're even able to work yet. Okay. So when you go see your dentist, if they are roughly 40 years old, they are still probably a negative net worth of over $1 million.
Wow.
Just FYI.
Yeah.
So having all of that as the context, this dentist asked me, how are you walking away? And I made one dumb comment to him, which changed everything for me. I said, I kind of figured out how to make money move. Now, he gave me that Scooby-Doo look. I tried to explain things that day. I just didn't do a good job. But a few weeks later, I get the next statement in the mail for my house payment. I literally take this picture as a joke and I send it to him. And I said, hey, take a look at this. My house payment was $24.19. And all he can write back is, I see it. I don't understand how you can have a $24 house payment. I'm buying a condo next month. Will you be my coach? Okay. He paid off the condo in 8 months instead of 30 years.
Yeah.
And so he tells his business partner, I tell a friend of mine what happened. They become the next two people I help. And all of a sudden, I'm listening to my heart instead of my head. And it says, this is the way you're going to make an impact in this world, is by teaching people what I now call the new rules of finance and the system around it so that they can get to their freedom sooner. That's why I'm talking to you right now.
So one of the things that I think is important about this is there is a relationship that we each have with money, how we feel about it, how we think about it. Can you speak to what it is that you feel changed for you as to how you saw money?
Prior to figuring this out, I'll call it just a it bordered on a religious zealotry, actually, in terms of having to get the nut to finally be able to retire, or the feeling of that. And the context or the phrase that I have now, like literally in the last week, have kind of come up with is
Okay.
that what this system is creating is financial flexibility first on the path to freedom. And I don't just mean financial freedom. I mean time freedom. I mean freedom with family and friends and loved ones and having the experiences, because we all work so damn hard. But it's just the way that the system is set up. It's just this rigidity where it's like, I've got all of these payments in front of me. A lot of them are fixed where it's like, I've got my mortgage payment until it ends, where it's either I'm spending $3,000, $3,500 a month or zero. And there's a different way to do it. And when you have that flexibility built into your life, because crap happens, you've got the resiliency to say, all right, I just got punched in the face, but I'm okay because I've built all of this resiliency to have this buffer or buffers if you own a business and your personal life, because you have to think of your personal life. It is a business. I don't think most people think of it that way. It's just the family business of the Knecht family or the
Yeah.
Polansky family or whatever
Yeah.
it is. It's still a business. And when you can think of it that way and you put in buffer there, now all of a sudden the shots come, I'm going to be okay.
So let's do this. Why is it important to be profitable? And what does that word profitable mean to you in this context?
To me, it's very funny. I don't care about profit. I care about cash flow, because you're well aware they're two different statements. And
Yes.
you have probably had, or your clients who then have their respective clients that are business owners. And I've started this way some of my presentations. You're sitting with your accountant and they say, congratulations, you made a profit of $200,000, $300,000, $500,000. I don't care what the number is.
Yeah.
And then you look down at your bank account balance, you look back at them and say, but where's the money? I guaranteed every single accountant, every single bookkeeper has had this conversation.
Oh, yes.
And I've said this in front of dentists, and I had all of them shaking, nodding their heads silently, saying, how does this guy know what my conversation is every single year? And so I explained, I said, look, you're both talking the language of money, you're talking two different dialects. Your accountant is speaking the language of the IRS and the tax code and trying to minimize what you have to pay to the government. But you live in the real world and you can't pay people with seashells and with love. You have to pay them with the cash that moves through your business. And so I'm trying to sit as an interpreter between what does your bank account say and what is your accountant saying. And so I'm going to do this early, and we have to come back to the very end. I'll do it. But the nugget that I want people to take away is, if you're sitting with that client and they're asking, where is the money? Say, you know that loan that you took out? Yeah. Not all of the payment shows up on the income statement. That'll explain 95% of why there is a difference between the bank account and what the profit and loss says, in terms of, you're telling me I have a profit, because only part of that payment shows up there. The rest of it doesn't. It shows up on the cash flow statement. And so there's the one takeaway. Learn those two sentences. It will save you gazillions of headaches. Try and explain this to your business owners. So I am much more focused on cash flow. I am focused on how do we get rid of the fixed debt payments in our lives, so now all of a sudden the money is there that we can either play defense and pay off other debt, or play offense in terms of bringing on team members, expanding marketing, investing wherever you want, but you have to have the money available.
Let's face it, tax season is about the past. You're filing reports, closing books, and looking into the rearview mirror. But the most valuable advisors, they're not stuck in the past. They're helping clients build the future. That's where Clear Path to Cash comes in. It's the system designed specifically for accountants and bookkeepers who want to deliver real advisory value without the guesswork. With on-demand courses, live training, and a powerful cash flow app, you'll learn how to uncover hid cash, guide better decisions, and close more high-value deals, all by simplifying the way you talk about financials. And right now, just for our podcast listeners, you can try any membership level for free for 30 days. Just use the promo code UAC25FEE at checkout. Stop looking backward, start leaning forward. Visit cashflowmike.com and enter UAC25FEE to unlock your free trial today. So for you, when you're actually speaking with individuals today and you're talking about this idea of being cash positive, what do you emphasize that they can implement and actually make this a thing that they're proactively doing, something that they're doing with intent so that they have the cash flow that you're speaking of?
So what my whole business, what my whole system is showing people how to use lines of credit strategically, because it's an open-ended, simple interest tool and attacking amortized payments.
Okay.
And so immediately, yellow flags, red flags go up and saying, wait, it's a variable payment, it's a higher interest rate. This automatically makes no sense. But when you look in terms of how amortized debt is done, let's just use a 30-year mortgage. Especially now with interest rates around 7%, 80 to 85% of those first 3 to 4 years is just interest. It's not helping you.
Correct.
You're buying the house first for the bank before it finally helps you. Okay. But now we can switch this around that we're putting more against the principal and lowering the overall interest that we're paying. It's just a strategic way to make money move, that you're utilizing a line of credit as your primary checking account. And when you get to see the entirety of the system, you see how much less interest you're paying and how much faster you can pay debt off.
So do you have an example that would help illustrate exactly what we're talking about? Because I'm very familiar with what you're discussing, but there's an eloquency to how you can now explain this to other people so that they can maybe catch the vision. So why would someone use, as you were just mentioning, the line of credit as their checking account, where they're funneling all that money into that line of credit and using it to now pay off the bills that they have? How does that pay down, for example, things such as a house mortgage, if you will?
Yeah, well, let's keep it a little bit simpler and use a car payment, just so we don't have some big numbers here. So let's pretend that it's a car payment of $400 a month. It's at a 0% interest rate, and there's still $12,000 remaining. So you're going to have 30 payments of $400 a month.
Okay.
And now let's say that we also had a line of credit in place, and it's at a 10% interest rate. Now, I would tell someone, if they're working with me, we're going to utilize the line of credit and pay off that car loan. We're going to just do a balance transfer. And now immediately it's like, why am I going to give up something that's at 0% to now utilize something at 10%? It's because you don't pay an interest rate. You pay a payment. And so, because the only thing you're required to pay on a line of credit is if you left the balance at $12,000 for the entirety of the month, the interest that's accrued is $100. And so which is easier to pay if business is tight, 400 or 100?
So you're trying to actually give them a little bit more flexibility is what you're first of all suggesting.
100%. Yes. 100%. So it's the flexibility. Now, the $100, you're not paying it down. I'm just trying to provide flexibility first. Okay. But then the next stage of this is, because the line of credit's an open-ended tool, if I put the money in today, I can get the money back out tomorrow. And so, we got to just kind of make up numbers. But if someone's household income after taxes, medical insurance, retirement was $7,000, and their expenses are $5,000, and they've got this balance on the line of credit, they're moving the $7,000 in, they're lowering the balance, which means they're lowering the amount of interest they're charged on a daily basis. And then when the bills come due, they take the money out. But that $2,000 differential is paying down the loan faster than your $400.
Yeah.
And so when you see all of this math, what happens over 6 months' time is that you spent $95 in interest to save 30 months of payments on $400. And so, yes, it did cost us more than just the $12,000, but I would rather have the time back where now you can utilize that $400 somewhere else. Does that make sense?
I do, or it does. One of the things that I think that's very interesting about this is I oftentimes see people using this with car loans or home loans to show that you can pay them off more quickly. The question I always want to ask is, what do you find is typically the motivation? Is it the freeing up of the cash that you're alluding to here, or is it the acceleration, or is it the interest that's being saved? What typically is the motivator for someone to actually kind of entertain or employ or exercise this?
It is someone that is just like, I'm tired of going to work to feel like all I'm doing is paying off debt. It's just, I go to work, I pay off debt, I don't feel like I'm living my life. And the cycle happens every single day. It's like, I need some breathing room. And I just don't know how to get there. And so, if I may, I'm going to expand. Like, you might say, okay, simple example, you save $400, big deal. Well, what if it was a $20,000 payment? Which was one of my clients. Again, more than half of my clients are dentists, kind of for obvious reasons.
Yeah.
So this was a dentist that came to me. It was a $2 million loan to buy their dental practice. It was a 10-year note. They were paying extra on it. So I met them in year 5. They had $600,000 left. But they were just like, it's a $20,000 monthly noose. I go on vacation, it's still 20 grand. I have a bad month, it's still 20 grand. They're like, I don't know how to maneuver around this. It took 5-ish months for us to get everything in place. Just numbers that big, it takes a while.
Yeah.
Once we were ready to go, the dentist says, can you talk to my 2 CPAs about this? Because there's no way I can explain this. I said, no problem. So we're down to about $520,000 by the time I speak to them. I'm explaining what we're doing, just kind of like this. And all of a sudden, I'll call it the good cop and the bad cop CPA. The bad cop CPA just stops me and says, this makes no sense. I said, okay, tell me more. The dentist could have taken their profit and paid down the loan. I said, I 100% agree with you. They could absolutely do that. So we would go from $520,000 to $400,000. It will speed up time. But Roger, what's their payment next month?
Still the 20,000.
And that's what she answered. I said, so how does that help? She had no answer for me. I'm like, it doesn't help because we've now used $120,000 of liquidity, of buffer, and we still have the same payment. I said, by rearranging everything that we did, which is going to be easier to pay month 1, $20,000 or $4,000? And the good cop is like, well, 4. I'm like, exactly. That's the whole point. And now, because of starting to understand the system, 9 months in, that $4,000 of required payment, which was the interest that was accrued, is now down to $1,300. And the dentist can now take a day off because they can hire an associate because they have the money available to do it. Before, it was just a stretch in terms of, I want to back myself out, but I need the money because I got to live and I've got to pay the bills. But now all of a sudden, we just freed up $190,000 a year in cash flow. You can hire someone 1 or 2 days a week and still have plenty of money left over.
That's right.
That's what I mean by financial flexibility.
All right. Now, one of the things I've noticed is I've had these same conversations, and I've actually had individuals suggest this as a way to attack, say, mortgages or business loans, is I typically find that people are say, drawn to this because of a debt consolidation interest. They're wanting to actually find a way to consolidate their debt. Do you find that that's typically one of the primary motivators to consider something like this?
Yes, but not loan consolidation the way that you're thinking that you see the commercials or anything like that. It's more in terms of going from a spray and pray to now being laser focused, where we can, when you say consolidate, if on the personal side, if we get a home equity line of credit and it is large enough to wrap in the student loans, wrap in the car payments, wrap in maybe you got a little bit behind on credit cards. So all of those payments are now consolidated into one place. And now we can attack with every single dollar to pay this off faster. If that's what you mean by consolidation, yes. If you're talking these loan consolidation programs where I have no idea how much they charge and it seems like a ripoff personally, but no, it's not that.
Correct.
So, but
Definitely not the
but
same approach, but what I'm referring to is the motivation of the individual to perhaps take this into consideration and possibly implement it.
100%. Yeah. So different dentists, when I met them, personal and business, they had about $19,000 in fixed debt payments between house, student loans, office, equipment, couple rental properties. After 2 years, we got rid of $15,000 a month of that. Okay. And so it's a huge win because he's like, I finally feel the relief. And I'm willing to let the last couple rentals and those mortgages ride. So it's not a failure to me in terms of that this doesn't have to be an all or nothing. He was trying to jump over 6-foot bar every month, and now we just lowered it to 12 inches. Whenever he wants to, he can lower it to 6 inches and attack the last two debts. But now he knows the system. He's educated in terms of, I know how to do this, but now I can take that money right now and go play offense. I can market my practice. I can go invest wherever else. But he's got the freedom to be able to do it.
So one of the things that I've found interesting is I've not only heard of this and seen it in practice, and more importantly, spoken to individuals that have implemented these same type of process, or let's say processes and philosophies, is at the end of the day, they're saying the system out there for us to get loans and access to these lines of credit are really designed to take care of the lender. This is to their advantage. This is how they make their money with the interest and so forth. And what we're really doing is we're actually redesigning how we're able to access the cash flow, as you've described, in our benefit, to our benefit, so that we're actually able to now more quickly take care of these obligations that we have and do so in a way that's a little bit more, let's say, free, in the sense that we have access to our capital and can really leverage our payments a lot better. Is that an easy way of describing what we're discussing here today?
So another term for money is currency. And so there's a reason why it's called currency. It has to move. It has to flow. Okay. So you go back to 2008, the banks that move billions of dollars every day, they stopped trusting each other because all the loans were crap that the mortgages were being written. Okay. You stop trusting each other, the money stops moving, the economy crashes. We've seen that. All right. So this whole idea of currency, I'm trying to remove the friction from people's lives. And so when you think of friction, and we'll keep it simple on the personal side, you've got that house, which is traditionally the largest asset that a family has, but it's a one-way street. Okay. You put the money in, you've got that titanium safe, you can't get the money out. So what do you have to do? You have to park your money in a checking account, in a savings account. And what does the bank do? They take your parked money and start to move it for their own benefit.
Yes.
And all we're doing is taking the rules of the game that they have set up and the tools that they provide and utilizing it for our own benefit to screw them. I have zero issue in terms of screwing banks. Let them screw everyone else. I'm here to help you because the game is rigged. And if you understood that there's two sets of rules, the ones that they provide by default, and now you can see the second set of rules if you play the game by design.
Get your free copy of the book In the Black, 9 Principles to Make Your Business Profitable. This is a how-to guide for accounting professionals to work with their clients and actually implement proven processes and systems to ensure that their clients make profit a priority. It is in this book you'll actually learn how to map the business and, in fact, make marketing, accounting, and production a priority within your client's business. You also learn the wisdom pyramid, how to actually take the information you're providing to your clients and effectively use it so that they can make more informed business decisions. This book is designed to help you communicate more effectively with your clients and, in fact, have them see you as their profit and growth expert. Get your free copy now of the ebook today. So here's one of the things that I want to maybe draw attention to then is, as you have these conversations and you help these individuals implement these things both personally and professionally, you're definitely addressing one of the things that as accounting professionals we're oftentimes dealing with, which is cash flows, the very thing that you mentioned at the beginning. Cash flow is one of the challenges that so many business owners struggle with. And as an accountant, we're actually trying to actually educate them the difference between that cash and accrual P&L. We're trying to help them understand how they can meet their obligations with payroll and with their vendors and so forth to stay in business, all from this cash flow perspective. And so this is a challenge we face regularly, very often. And I like the fact that we're introducing an approach that might actually give them access to not only liquidity, but more importantly, to the monies that they already have claim on and the fact that it is their capital. So the thing I'd like to ask is, how have you seen this change people's lives in the sense that you've freed them from these bigger payments and so forth?
Man, such a good question. I go back to the idea in terms of we work hard to enjoy this with our family, to have the experiences in life. And so here's one where you're going to be like, wasn't expecting that.
Okay.
When I go back to the idea of like, is this recession proof in terms of this whole concept? The answer is no. You still have to have income. You can't just have expenses only and
Oh, of course.
magically think the debt's going to go away.
Yeah.
All right. But I do like to call this recession resilient, whether it's the current economy and tariffs making everyone just kind of stand still because no one knows what's going on, or if there's something that happens in your personal life. And so about 7, 8 months ago, I get a text from one of my clients saying, guess what happened to me in September? Now, this is totally out of the blue. I'm like, I have no idea. COVID? No. 2 ruptured aneurysms and a mini stroke. Roger, the dentist is 46 years old. I don't think if they were to draw their perfect life plan, having brain surgery and sitting in ICU for 3 weeks was part of it.
Nope.
Just a guess. Okay. So I ask, obviously, are you going to be okay? And yeah, making a full recovery, getting back to work, shockingly. But they write in the text, lost a ton of production. No kidding. Line of credit came in handy to pay the bills. This is why, because just stuff's going to happen. Now, here's the funny part about all of this. The dentist did this for their business. The spouse thinks that what I do is complete voodoo nonsense. But if they did do this on the personal side, their personal expenses would have gone down $40,000 a year, and they would have had access to cash because of the home equity lines of credit of $1 million, above and beyond everything else they've already saved and invested for. So I'm going to ask you, Roger, and I know I'm not a lawyer, so I'm probably leading the witness here, but and knock on wood, this never happens, but if your spouse was in the ICU and having brain surgery, how productive do you think you'd be at work?
Oh, not very.
Yeah, I can tell you, 0. Would it be nice to have the buffer of an additional $1 million of cash just in case you need it?
Well, the thing is,
That's it.
Yeah, you're attacking this now from that emotional side, which I think we need to consider, because there is that obligation that each of us hold individually. We have things that we have to pay, and what you're providing is some flexibility that wouldn't otherwise exist. And so when life throws at us these unexpected challenges, it does afford us the ability to be more flexible with the situation and have some freedom to not only pause and take care of the situation, but also how we want to handle the situation as well. So I think that's a great illustration of how this can be very beneficial. And having seen personally individuals that have implemented this, I've seen where it's actually freed them up to really handle some of the life's challenges that they didn't otherwise expect. So I appreciate you sharing this. So here's the thing that I'd like to do. I want to kind of start wrapping this up. And as we wrap it up, I want to come back to you for a closing thought. But for my listeners, I want to point out that Howard's been very kind to actually share with us something that you can all take advantage of, and it is a cash flow quiz. You can go to the episode description and actually find information on what it is you can be doing to really learn a little bit more about this strategy, this philosophy, and really gain more control over your financial wherewithal and well-being so that you can more intelligently leverage your money to your advantage. And honestly, with regards to some of these approaches, maybe tackle some of the challenges that will naturally come your way with a little bit more confidence. So definitely take advantage of this cash flow quiz and learn more about what it is we're discussing here as it relates to now managing that debt that you have. The second thing I want to share is in the episode description is you can find information regarding the book Red to Black. Red to Black is a book designed specifically as a how-to guide for accounting professionals to address this specific challenge of cash flow management. As accounting professionals, it's one of the most common things that we face with our clients is assisting them to go from being in the red to being in the black. And this is exactly that how-to guide to give you that turnkey approach you need to service that need of your client so that they can look at you and see as an accounting professional, you are able to address their cash flow situation. So definitely take advantage of these two opportunities. Now, as it relates to the conversation today, I think this is fascinating. I mean, just the story at the very beginning, as Howard related what it was that his son was going through that really caused him to not only question his profession and the stresses that he had there, but determine what he could perhaps do differently to serve and better, let's say, just mankind, if you will. And he related, obviously, that he sold his dental practice, and from that went through a decompression, and he described it as a depression, trying to find himself. And I thought that was so well described. But he then found that he was able to assist individuals in eliminating the cash constraints, that weight that so many of us experience, especially those of our clients, as we're all running our businesses, all that obligation that we've taken upon ourselves through the schooling, through the purchasing of a business, through the building of a business. And as we have that debt that's now surrounding us, we have those obligations. How can we now manage them so that intentionally they're not these things that are weighing on us month after month, that we can actually put them into a little bit more of a control for us? And he illustrated very well how we could actually take those debts and leverage a line of credit to more intentionally manage this, basically giving us a pathway to freedom, if you will. And then the other thing that I thought was helpful as a summary of this conversation is the fact that we brought the emotional component into this. Honestly, there is this money game of how we can better leverage interest and capital. And as accounting professionals, maybe give people pathways to better manage their money. But there is an emotional element to it, something that we need to consider, that really we're looking for peace of mind. We're being able to offer our clients some relief to the stresses that they're experiencing. So they're not at 40 having brain surgery and dealing with cardiac arrest. They're actually at the age of 40 living a little bit more free, their business, their lives, so that they can be happier. So what would you add to that, Howard?
I mean, you just summed it up so well. The only thing that I want to just share is, well, what are the types of lines of credit? Because we're kind of walking around this.
Yeah.
So if I may, I'll bring up kind of the more common ones. So a credit card is technically a line of credit. This is not the way to play the game, though. Like if
Yes.
you have to use something where you potentially are going to get charged 30% interest, no, do not pass go, do not collect $200. Um, on the personal side, home equity line of credit. If you've been in a house for, let's just say, the last 5 years, it's probably appreciated substantially. There is trapped money in there. Go, at worst, go get a line of credit. What's the worst that happens? You have the money available. Okay. If you never use it, think of it like a credit card that's secured by the real estate of your house. If you charge nothing, you owe nothing, but at least have the money available. On the business side, you can have business lines of credit. If you own a building, it could be secured by the real estate, but the more traditional one is based upon the revenue. The rule of thumb is 10% of the annual revenue of the business. So if it's $1 million business, figure about $100,000 business line of credit. Just there's the rule of thumb there. If someone's got permanent life insurance, you can do a line of credit against what's known as the cash value inside that. If you have a brokerage account, and after tax, I'm not talking Roth IRAs or 401ks or anything like that, you can get lines of credit against that. It's called the securities back line of credit or asset based line of credit. So there's all different ways potentially of getting access to cash without having to sell anything. The more levers we have, the better you sleep at night.
I appreciate you doing that explanation because that is one of the details that we failed to really go into. The way I like to describe it is this. First of all, the equity in your home, it's your money. You're just now getting access to what is yours. The second thing I'd point out is with lines of credit, honestly, you can become your own bank. And that's one of the beauties of that line of credit is you use it when you need it. And more importantly, if you're not using it, there is no payment needed. So I think those explanations are very helpful and important here as we're explaining all this, because honestly, at the end of the day, it's those mediums that allow us to actually leverage some of the things that we were discussing earlier. So thank you for that. So as I wrap this up, one of the things I want to do is if you haven't already subscribed to the podcast, definitely want to encourage you to do so. Love to have you listening each and every week as we bring on experts to share with us different insights and things we need to consider as accounting professionals as we service our clients. Definitely subscribe, set the notifications, and get those reminders so that you can join us each and every week. In addition to that, I want to invite you to universalaccounting.com. There in the navigation, you'll find free resources. That's where you'll find free ebooks, courses, white papers, just a variety of resources to assist you as an individual, personally, and as an owner of an accounting firm, professionally, so that you have tools and resources to actually work on your business. It's here that you'll actually find a variety of things that we've collected over the time to assist you in taking a moment to reflect on what it is you can be doing to build your business and offer quality accounting services. So check out the free resources there. It's also in the navigation that you'll find information regarding the podcast. Here we'll actually have playlists. These are highlights that we've collected over the years of different conversations that I would encourage you to go binge listen to. These are things that you can identify based on the playlist that we've compiled of marketing, selling, pricing, tech stacks, just the experts themselves sharing insights as it relates to these specific topics that are perhaps very timely for you. So go check out those. In addition, I also want to invite you to GrowCon. GrowCon is an annual event. It's a conference for owners of accounting, bookkeeping, and tax businesses where we get together and hear from the experts, basically putting on stage those individuals that have insights for us to consider as we're running our business. We also have the peers, those individuals as attendees that we can meet with and build friendships with, perhaps even collaborate to better take care of our clients. So come and build those relationships. And then lastly, meet my team here at Universal Accounting Center, those individuals who are committed to helping you be in business for yourself, but not by yourself with Universal Accounting. The last thing I want to point out is as it relates to this and the other conversations we've had over the years, if you'd like to look at what it is you can be doing to build a premier accounting firm in your area, check out universalaccountingschool.com. It's there that we have courses, curriculums, programs specifically designed to actually assist you in getting the skills you need, as well as for your staff to offer quality services, becoming a professional bookkeeper, a QuickBooks specialist, a professional tax preparer, an enrolled agent, helping you actually also become a profit and growth expert. Each of these things enabling you to offer quality accounting services and get paid what you're worth. Lastly, I want to say this. If you'd like to ask more questions about these things and other things that we've discussed, feel free to reach out to us. You can give us a phone call at 801-265-3777. And always remember, if it's about accounting, it is universal. Take care and have a great day and be safe out there.